For years, the US didn't just rely on visitor numbers. It relied on a specific kind of traveler. The ones who stayed longer, spent more, explored more, and quietly kept entire states afloat. But in 2025, that system collapsed. Not because people stopped traveling, but because the United States became the only major destination where high-value travelers pulled back. The travelers who once delivered the biggest economic punch began arriving less often, staying for shorter trips, or skipping the US entirely. And when those visitors pull back, the impact hits differently. From hotel revenue and airlines to state budgets and the cities that depended on their spending. Some of the countries on this list will surprise you. Others won't. But together they reveal where US travel is heading next. If stories like this matter to you, hit like and subscribe. It helps get this video in front of more people who need to hear it. Let's get started. Number 7. Denmark. Denmark is not a big country, just 6 million people. But when Danish travelers change behavior, it matters, because they are among Europe's highest value long-haul travelers, staying longer, spending more, and returning often. Earlier this year, that relationship fractured. When renewed rhetoric raised questions about the future of Greenland, it struck a nerve in Denmark. What followed wasn't a government response, but a consumer-led boycott of US products that spread quickly across Danish media and public discourse. It wasn't performative, it reflected a deeper shift in trust. Then the travel numbers collapsed. By the end of 2025, travel from Denmark to the United States was down by 25% year over year, the steepest decline recorded among European countries. That's not seasonal. That's not inflation. That's a behavioral break. That matters more than you think, because Denmark doesn't move in isolation. It's deeply connected to the Nordic region and wider Europe. When Danish travelers pull back this sharply, it often signals where sentiment is heading next. And now, with Greenland back in the spotlight and the tone growing more serious, this doesn't look like a temporary pause. It looks like a relationship that may not recover in 2026 at all. And what's happening in Denmark mirrors a broader change taking shape across Europe. Number 6. Switzerland. Switzerland tells a very different story than Denmark, but the outcome is just as costly. Swiss travelers are among the highest spending visitors to the United States. They travel less often, but when they do, they stay longer, fly premium cabins, book higher-end hotels, and spend more per trip than almost anyone else. Their US trips tend to focus on premium destinations, places like New York, California, and other major hubs that blend business, culture, and luxury travel. In 2025, that market pulled back. By the end of the year, travel from Switzerland to the US was down 11% year over year. That may not sound dramatic until you look at who stopped coming. The decline was concentrated among families and younger travelers. Entries by visitors under 18 dropped sharply, and travel among those aged 18 to 24 fell by around 20%. Older travelers, by contrast, showed little change. That matters because it shows this wasn't about affordability. It was about confidence. By late 2025, even Switzerland's travel industry stopped treating this as a short-term dip. Martin Wittwer, president of the Swiss Travel Federation, warned that US-bound travel could be cut in half by 2026 if current trends held. Switzerland shows what happens when hesitation spreads quietly, not through headlines, but through high-value travelers choosing to stay home or go elsewhere. Number 5. Australia and New Zealand. Australia and New Zealand represent one of the most committed long-haul travel markets to the United States. Trips from Oceania aren't casual. They're high-effort journeys planned far in advance, built around long stays and just a few anchor destinations. For travelers from both countries, U.S. trips traditionally centered on California, Hawaii, and New York, often extended with stops in Florida or Texas. In 2025, that pattern weakened early and deteriorated further as the year went on. By the end of the year, travel from Australia to the U.S. was down around 7% year over year, with the sharpest declines in the second half. New Zealand saw a much steeper pullback, finishing 2025 well into double-digit decline territory, with no late-year recovery. Both countries didn't just reduce travel, they rethought the value of a US trip altogether. What's notable isn't just the drop, it's where that demand went. Australian travel agencies reported sharply reduced US bookings, especially for family holidays, as travelers redirected spending toward Europe, Asia, cruises, and other long-haul alternatives. In New Zealand's case, the pullback was reinforced by growing visa and entry friction. A record number of travelers reported problems entering the US in 2025, fueling a perception that the country had become less welcoming and more unpredictable. Australia and New Zealand show how quickly high-effort travel can be rerouted. And across the Atlantic, a far larger market was already moving in the same direction. Number 4, France. France has long been one of the most important sources of international tourism to the US, with the travelers who tend to spend more time and travel for culture, cities, and iconic experiences. And until recently, that relationship was still growing. After a 15% surge in 2024, travel from France to the US reversed course in 2025, finishing the year down 7%. That swing alone translated into well over 100,000 fewer French visitors, a shift felt across major gateways. What makes France stand out is the mood behind the numbers. In a major 2025 poll, 73% of French respondents said they no longer viewed the United States as an ally. That doesn't mean everyone canceled a trip, but it shows how sharply perceptions shifted, and how quickly sentiment can cool when the political climate changes. For French travelers, the US isn't just a destination, it's an idea. When that idea loses appeal, people don't postpone trips. They choose somewhere else. That shift played out alongside growing distance between Europe and the US, from disagreements around NATO to the ongoing war in Ukraine. None of that stops flights from operating, but it changes how the country is viewed and how welcome travelers expect to feel when they arrive. France shows how perception can turn first. Next, we look at another major European country where the shift became impossible to miss. Number 3, Germany. German travel to the United States has always been defined by predictability. Trips are planned early, followed carefully, and repeated year after year. This is a market built on structure, not impulse, which is why any shift here matters. In 2025, that structure began to shift. Germany's Foreign Office updated its U.S. travel guidance, emphasizing that an stay or even a valid visa does not guarantee entry, and that border discretion had tightened. It wasn't a dramatic warning, and it wasn't framed as a crisis. But in Germany, clarity and predictability matter. When the rules feel less fixed, behavior adjusts. The results showed up in the data. Across all of 2025, travel from Germany to the United States declined by 12%. That number may not sound severe in isolation, but context matters. Germany is one of Europe's largest and most stable outbound travel markets. Even modest movement here translates into real impact for airlines, tour operators, and long-haul travel patterns across multiple U.S. regions. This wasn't an emotional reaction or a political statement. It was a calculated response to increased complexity and uncertainty. And when a market as disciplined and predictable as Germany begins to step back, it signals that the shift underway isn't temporary, it's structural. Number 2, United Kingdom. The UK is traveling more than ever, setting outbound travel records across Europe, Asia, and beyond. In 2025, British residents took more international trips than at any point before, with Spain, France, and Italy absorbing much of that growth. But one major destination didn't benefit from it: the United States. UK travel to the US didn't collapse. Arrivals were broadly stable. But that stability came after a strong rebound in 2024, and at a time when global travel was accelerating. In other words, momentum stalled. And for a market as consistent as the UK, a stall is unusual. Late in the year, that hesitation became clearer. December arrivals from the UK fell year over year, signaling caution rather than renewed confidence. British travelers didn't abandon the US. They shortened trips, delayed bookings, or chose closer alternatives instead. That difference is critical. When UK travelers continue traveling in record numbers but hesitate specifically around the United States, the issue isn't demand, it's preference. The UK shows what it looks like when a major market doesn't pull away dramatically, but quietly stops moving forward. Our next country shows what happens when that hesitation turns into a full pullback. Number 1. Canada. Canada isn't just another international market for the United States, it's the largest one. And in 2025, it broke away from every other case on this list. According to official figures from Statistics Canada, Canadian visits to the US fell from 31.9 million in 2024 to 22.9 million in 2025, a 28% year-over-year decline. That's not a rounding error. That's nearly 10 million fewer trips in a single year. What makes this even more striking is how the year unfolded. The pullback didn't happen all at once. It started early, then deepened month after month. By December, Canadian travel to the US was down more than 30% year-over-year, ending the year at its weakest point. This wasn't caused by a lack of travel appetite. Canadians continued traveling, just not south. Trips shifted toward domestic destinations and other international markets, even as US crossings continued to fall. That distinction matters. When the largest inbound market doesn't just hesitate, but decisively changes behavior at scale, the impact is immediate and impossible to ignore. And as 2025 closed, there was no sign of recovery. The year didn't stabilize, it accelerated downward. Canada shows what a full pullback looks like. And it raises a question the United States can no longer avoid. When your closest market steps away this sharply, what does that say about what comes next? The shifts we've seen this year aren't random, they're signals, from hesitation to slowdown to full retreat. And while each country tells a different story, they all point in the same direction. The world is rethinking its relationship with the United States as a travel destination. Whether this is a temporary dip or a lasting reset remains to be seen. But one thing is clear: global travel isn't moving the way it used to, and the US is no longer the automatic destination it once was.